The Dow Jones Industrial Average dropped more than 600 points on January 20th, 2026, following President Donald Trump's announcement of up to 25% tariffs on imports from 8 NATO allies over their refusal to support his Greenland acquisition plan. So the question is, how did tariff threats linked to Greenland trigger a global market sell-off? And what are the broader implications for transatlantic trade and financial markets? Let's solve this equation. What's happening, capital trackers? Welcome to the resource equation, where we don't predict markets, we understand them. If you're new here, hit subscribe. We break down the week's biggest macro moves with zero hype, just facts. On January 18th, President Trump escalated tensions with European allies by threatening a 10% tariff on goods imported from Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland starting February 1st. This tariff would rise to 25% on June 1st if no agreement was reached on the U.S. plan to take control of Greenland and self-governing Danish territory. Trump's announcement came after months of diplomatic friction and was linked in part to his frustration over not receiving the Nobel Peace Prize, as revealed in a text message to Norway's Prime Minister Jonas Gahr Støre. The threat targeted some of America's closest NATO partners, raising concerns about the future of transatlantic relations. Here's where it gets interesting. The tariff threat is not just about Greenland, but signals a potential reopening of trade conflicts with Europe. The 8 countries targeted represent major U.S. trading partners, with combined imports to the U.S. exceeding those from Mexico and China individually. The tariffs threaten to disrupt established supply chains and trading agreements that had been negotiated over recent years, some of which were frozen or delayed amid earlier tensions. 3 numbers tell the story. First, on January 19th, the STOXX 600 index across Europe fell by 1.3%, with Germany's DAX losing 1.1%. France's CAC 40 down 1.3%, and Britain's FTSE 100 dropping 0.3%. Second, U.S. stock futures fell sharply before markets reopened, with S&P 500 futures down 0.8% and Dow futures down 0.7%. And here's the kicker. When Wall Street opened on January 20th, the Dow Jones Industrial Average plunged over 600 points, or about 1.1%, while the S&P 500 fell 1.2% and the Nasdaq dropped 1.5%, led by technology stocks such as Nvidia and Amazon. European leaders responded strongly, calling the tariff threats blackmail and warning they would undermine NATO and transatlantic cooperation. An unusually forceful joint statement came from Denmark, Norway, Sweden, France, Germany, the UK, the Netherlands, and Finland, emphasizing the risks of a dangerous downward spiral. Business groups in Europe urged the European Commission to consider countermeasures, including activating the EU's anti-coercion instrument, a tool designed to respond to economic pressure from third countries. Germany's engineering and auto industry associations warned of enormous costs if tariffs were imposed. And pause here. Does this make sense? Drop your take in the comments. The market reaction was not limited to equities. Investors sought safety in precious metals, pushing gold and silver prices to new record highs. On January 19th, gold surged 3.4% to near $4,689 per ounce, while silver jumped 5.7% to over $94 per ounce. These moves reflect demand for safe haven assets amid geopolitical uncertainty. Meanwhile, oil prices dipped slightly amid concerns that trade tensions could slow global economic growth and reduce energy demand. Brent crude fell 0.8% to $63.64 a barrel, and U.S. crude dropped 0.7% to just above $50 per barrel. But dig deeper. The tariff threats come at a time when the Federal Reserve is closely watching inflation and economic growth. Inflation remains stubbornly above the Fed's 2% target, even as the central bank cut benchmark interest rates 3 times in late 2025 to support a weakening job market. Renewed trade tensions could add inflationary pressure by increasing import costs, complicating the Fed's policy decisions ahead of its next meeting in early February. The government's Personal Consumption Expenditures Price Index, or PCE, the Fed's preferred inflation measure, is due for release later this week, potentially providing fresh insight into inflation trends. Remember that question about broader implications? We're getting closer. The tariff threat also comes as corporate earnings season continues. Companies across sectors are reporting results that reveal how businesses are coping with inflation, higher tariffs, and cautious consumer spending. For example, industrial conglomerate 3M's shares dropped 7% following mixed quarterly results. United Airlines and Netflix are scheduled to report after market close on January 20th, while other major firms like Johnson & Johnson, Halliburton, and Intel will release earnings later this week. These reports may offer clues about the economic effects of tariff uncertainty and geopolitical tensions. And real talk. What's your hypothesis on why President Trump chose to escalate tariff threats now, particularly targeting NATO allies over Greenland? Back to our opening question. Here's what we now know. The immediate market response reflects fears of a renewed trade war that could disrupt supply chains and capital flows. The US dollar weakened against safe haven currencies like the Japanese yen and Swiss franc, signaling investor caution. European markets experienced sharper declines than Asia, where reactions were mixed. Japan's Nikkei fell 0.7%, while South Korea's Kospi rose 1.3%, driven by tech gains. The situation remains fluid, with diplomatic efforts underway, and the World Economic Forum meeting in Davos adding a backdrop of global economic uncertainty. Okay, stop. Rewind for a second. The Greenland tariff threat is more than a trade story. It touches on geopolitical alliances, the stability of NATO, and the trust between the US and Europe. The prospect of retaliatory tariffs from the EU targeting $108 billion worth of US goods, suspended since August, is now back on the table. How these economic and political tensions evolve could shape global markets beyond the immediate sell-off. What comes next? Markets will monitor the U.S. Federal Reserve's policy meeting next week, the PCE inflation data due this Thursday, and upcoming corporate earnings reports. Meanwhile, diplomatic negotiations between the U.S. and European countries will be closely watched for signs of de-escalation or further escalation. The World Economic Forum in Davos this week could also influence sentiment as world leaders discuss global economic challenges amid these tensions. How do you interpret this? Who gets affected most by these tariff threats? What signals are you watching for in the coming weeks? Let me know in the comments. And if you found this valuable, hit that like button. Now, while the Greenland tariff story is grabbing headlines, there's another equation being solved in real time. ASML and Nvidia's massive rally, the TSMC effect explained. If you think today's story matters, you need to see what we uncovered there. Link in the description. Watch it next. Subscribe to the Resource Equation for weekly breakdowns like this. Next up, how semiconductor supply chain shifts are reshaping tech markets. See you in the next one. A quick reminder, this video reports and explains public information. It does not offer investment advice.